Because what I've found with bullish divergence, sometimes if you take the D1 trade with the bullish divergence and you've not allowed it to test the 800 EMA or at least break the 800 EMA, 9 times out of 10 it might come lower and the divergence might be still building. So it's really important for you to be patient when you are trading the D1, because divergence can build over time. You need to make sure that you're using the divergence as your advantage to come higher. So as we know with divergence, obviously it shows when bullish divergence is when price is coming lower. As you can see, it's come within a downtrend here. But the TDI, which is the Traders Dynamic Index, this is the indicator that I use as well. As you can see, price is coming higher if you follow the TDI trend there. So it's when price comes lower, but the TDI is saying that price is going to come higher. That's what bullish divergence is. So it's when the market basically presents a setup when price is going out of your favour. So you're able to rely on the TDI. That will be able to give you a much more reliable representation with what's actually going to go on going forward. Do you measure divergence from the wicks or the body? Body always. It's really important. I think wicks as well. I'd only sort of consider the wicks when I look at sort of key levels, so key support and resistance levels, but I always use sort of the closure when drawing my divergence. Some people might disagree or agree, but I just like using sort of the strong bodies. I think it's a lot more accurate to go off, especially when you're drawing the divergence.
DXY is like an old girlfriend. Doesn't know where to go, doesn't know what it wants. That was just a joke though. Or I've seen some jokes on TikTok lately where you're like, the man is like, or the guy is like ordering whatever it is, let's say takeaway, and he's asking his girlfriend or wife, whoever it is, do you want something? She's like, nah, I'm not hungry. Do you want something? Nah, I don't want anything. And then when he orders, she's like, did you buy me something? Did you buy me something? This is like dollar today. We are indecisive, not really going anywhere. We are like, well, we want burgers, we want chicken, we want fries, we want everything, but we don't really want to say it loud. So we're just expecting you to do that. And when I told my wife that, she was like, yeah, you're supposed to know that. Okay, I guess.
So if I look over here, so let's ask the question, because you have to, right? When you look at these trade setups, you've got to ask the question, do I have enough evidence to be able to say it's now time to go ahead and trade? Well, firstly, number one, there was a bit of range trading right here between the tops and bottoms right here, right? And so as we break out of a range, normally what happens is price does something like this, right? Price goes ahead and rallies back up to this point. Then it may go ahead and drop back down and get to an actual level of support right here, then start working its way back up. All right, so this could definitely happen. But the thing here is that you have to consider is this: it's that if we do trade back above this level right here of this, then this would be my support level that I can go ahead and trade. So right now, there's nothing clear that price is trading at a support right now. So I have to be a little more patient on this. And I have to either wait for price to get back down to the 382 bounce right here, or wait for it to get back into this range and then trade the range. So although we've got sort of a directional bias on the Aussie JPY long term, we need short-term support to be able to get in on that position. So we're going to sit on this one and we're going to wait this one out. And we're going to see if we can get price coming back to a nice support level right here. And then we'll go ahead and consider buying in on that position. So I don't see any other evidence that could convince me that price is going to turn at this level.
But, like I said, just in summary, price is moving sideways. We're doing nothing but consolidating. If there was a move here, I did point out, let's see, 2:30, about London session. there was a double top, a little bit of a double top action here, right? We got 1 mountain, 2 mountain. You know, that's just basic market structure things right there, right? We meet up here, resistance, and you could have took an impulse sell for that. If we break that down onto the 5 minute here, you can see what I'm talking about, right? We had price come back up and test this resistance again, you know, and that's just called a double top. It's a bearish formation. And typically we always say you sell at the neckline, which would be where it meets in the middle here. So, you know, we have our people who take impulse entries up here. They're like, oh, okay, it's a double top. Let me take a sell. And then we have people who, you know, they may wait for confirmations. All right, so I'm just going to put this in replay mode so I don't distract you. Here we go. So once again, double top, start it over just in case I lost you. Double top, we meet at the neckline, right? Sniper entry says at the neckline, you take your sell, which would have been right here on that candle. Okay, and you would take your sell to the downside. And if you did take a sniper entry here, you would have had about 32 pips, right? And what I was saying was those people who do like to enter early probably entered up here. You know, they probably did. Me personally, I like confirmations. So what I would have did was, you know, if we just back test this a little bit, we say, okay, how could we have entered this move? What could we have done here? Let me put it back a couple candles. Right now, I like the 15 minute, so I don't typically take entries on the 5 minute. But you know, if you look at the 5 minute, you know, you probably would have said, oh man, I've missed the entry, but you didn't miss the entry. You know, you just have to wait for another setup. So if we go to the 15 minute, what I want to see is price either consolidate. So I want to see price either go sideways and then break down, and then I can take an entry right here, or I'm looking for price to have a pullback and then I can re-enter, right? So you may even write that down in your notebook. Whenever you miss an entry or you're like, oh, that's a good move, all you gotta do is either A, wait for price to consolidate and break, you know, wait for a break structure, or 2, wait for a pullback and you get in on the pullback, right? So there's always more options to get into the market.
But for me, the biggest interest, truthfully, is actually this. If we see, I don't expect this to happen, but if it happens, a break and retest on gold could be beautiful. And I'm going to be completely honest with you guys. I was saying the exact same over here and we never got it, right? We didn't get the break and retest. So that may be a repeat that we're about to see right here. But again, you've just got to be accepting of what the market chooses to do. As we come into this big supply zone, if that level were to break, the rush from buyers could be huge. You could get a massive reversal or a massive push into the buy zone. People are going to say, you know, oh, it's too high, it's got to come back down. And that's not necessarily the case. If you get that breakout, you get a clean green candle above this supply zone, you could very well attract a huge amount of new buyers to push this thing way higher, right? So what's the action, Nick? What are you actually going to do on gold? For now, nothing, but my scenario would be this. If we get a big green candle, if we get a solid demand level, then I will be looking for the pullback and the opportunity to go long. Outside of that, I'll do nothing. That's my honest take for you.